So, welcome back, everyone. I hope you guys have been enjoying the retreat so far. So, just a bit of housekeeping for people who have just joined us. Please rename yourself to your name and then your company name, so that people know who's in the session. If you can, keep your cameras on. It's much nicer for the speakers to be able to see your faces and see how you're reacting to the content. And of course, confidentiality, things that are being shared here are confidential. So I think we can take it away. So let me introduce our panel for this session. So we have Chris Rogers. Chris is a co-founder of Nextel Communications, a company that grew to 13 billion in sales and employs over 19,000 people before it was acquired by Sprint for 35 billion. Chris is partner at Lumia Capital and has over 30 years of experience of the mobile industry. And Talal Bayah, our Endeavor UAE entrepreneur, is the co-founder and CEO of Bayzat. So you guys, I think everyone here should have already received the pitch deck of Talal. If you haven't, I can share it with you now. And then it's up to Talal and Chris if we can also share it on the screen here. But Bayzat basically is a platform. It's a one-stop HR platform that lowers HR management costs and simplifies the tedious HR processes for SMEs. And the platform ultimately serves as a customer acquisition and data collection tool through which the company offers cross-sell health insurance and car insurance and other financial products. So with this introduction, I'm going to hand over to Chris. Basically, we have an hour where Talal is going to pitch to Chris. And Chris promised to be, I don't know what mood Chris is in today, if he's going to be mean or if he's going to be kind. But basically, Chris is going to give us insight into what he's thinking. So every time he's asking a question, he's going to tell us why he asked that question. And then he's going to give feedback to Talal and explain to us the information that Talal is sharing, what it's telling to the investor from the investor's perspective. So take it away.
Hello all. Does the fact that I have 2 coffee cups give you an idea of what kind of mood I'm in? You can sound off now. I hope there's something else in that water bottle.
Yeah, I've never seen Mean Chris, so looking forward to it.
Since there are a fair number of people on this call, I mean a fairly small number of people, why don't I'd be happy to have interaction during the panel as well. If I don't know if you've got everybody on mute, but if there's a way of people say, well, wait, why did you ask that, Chris? Not if just Talal asks me, hey, Chris, why did you ask that question? Because I think that's even more interactive. And then on top of that, let me apologize in advance. It's relatively early here on the East Coast, and I'm on puppy duty. And so you may hear barking or something like that in the background. And there's nothing I can do about it unless I want the wrath of I call them children, but they're all adults, they're probably your age, who are all living here in our beach house, working and ignoring the puppy that they begged to get. So there, I'm in a really bad mood, but I see a lot of smiling faces and people I know, and that's a good thing. No, that's a nice group here. So I think what might be interesting is just a second on what I'm thinking when I start a pitch and when I start a pitch session. And I'm thinking usually of the context, and the context is, did somebody ask me to do this? Am I doing this because my LP called and said my brother's uncle's sister's cousin has got a startup that you're going to love? Am I doing it because this is the hottest company in town and I'm so happy I finally got that meeting? Am I doing it because it's an Endeavor pitch event? And those things do matter, and it's really hard for you to discern that. But one thing that is always the case is that even if I'm doing it as a favor or I'm not likely to be interested, I usually want to make sure that I leave an impression that is good enough that if unexpectedly I want to get into that deal, I haven't burned any bridges. And so I'm pitching myself just like you're pitching yourselves. And I think it's useful to keep that in mind. It doesn't mean that you need to be arrogant or anything like that, but this is a two-way street, and VCs want to get into the best possible deals. And probably you've got a reasonable sense that your deal is one of the best possible deals. So then what, hey, Talal, nice to meet
Chris,
you.
maybe I can add something from my side when I speak to a new investor. So typically, I also like to find out some information as well. Especially here in the Middle East. So typically, I want to ask things like, so I want to know, like, are they still investing, right? So do they have money? So I ask about, the fund, how much capital is left in the fund. Given that we're in this region, I like to ask if they've invested in this region before, or in the space that I'm in, or in the stage that I'm in as well. And if they haven't, it's an indication that, you're always unlikely to be the first. So that's something that I have to really sell hard. And in addition to that, I also like to ask what type of growth rates, metrics they look at, just so I know how to position the pitch.
Right. Well, that's good. So I don't know if we want to follow along with the deck or if we want to just keep our pictures up. It's fine either way. But the next thing. So when Talal starts pitching, what I'm going to look for from him is relevance, and maybe it's come in a cover letter, maybe it's been discussed, but you have to assume that I'm going to see on a day, maybe sitting in my office, I might see 10 pitches. And I might see 10 pitches over 5 days, 6 days, 7 days, and each. So I may not remember the setup. I may not remember that they are the platform to make HR easy or whatever it is. And I may not remember what the ARR is or whether they're a seed stage company. And so because most VCs have verticals and they also have check sizes and they have stages that they play in, not to mention geography, I think it's important to reiterate that, because hopefully other VCs are similar. If it's something where you say, gosh, I'm a seed stage company, and I go, oh, that's right, the only reason you're here is because Mo forced another deal on me, and I think Mo's on the line there somewhere, isn't he? And it's not really relevant as an investment. Well, then I turn my mind to, how can I help them? What is it that is they need, to improve their pitch or otherwise? So stating sort of at the outset, we're a fintech business that we have $3 million in revenue. We're raising $20 million to expand into Saudi or something like that is never a bad thing. But anyway, hello, Talal. Can you tell me about your business?
Yeah. Hey, Chris. Sure. Let me start by giving you some background on the company and myself. So I'm Talal. I'm one of the co-founders at Bayzat. I was born in California, but been living in the Middle East since I was 6 years old, and went back to the US in 2004, graduated in 2008, and did 2 years of investment banking and 2 years of private equity before starting Bayzat. Initially, so in 2013, we started working on the concept, and we were looking to build a consumer platform for financial services. So sort of like a mint.com for the Middle East and Africa, where consumers could integrate all their financial service accounts, such as banks, loans, cards, investment accounts, insurance lines, into one platform. And the first iteration of that, because we realized that, integrations wouldn't be possible at the time, was a price comparison website. So we launched that towards the end of 2013, and through that journey, we really discovered three things about the traditional financial services space that stood out to us. So the first thing we realized was that distribution was very difficult for traditional players like insurance companies, banks, and agents. The reason that distribution was difficult was because they're selling highly commoditized products. The second thing we realized was that customer engagement was also very challenging, especially on the insurance side, where there's actually a negative correlation between customers engaging and using a product and the profitability of those companies. And then third, and probably most surprising, was the data side of things. Back then, they kept telling us that risk underwriting was their core competency. But once we actually got into it, we realized they're all using the same data sets and the same methodologies to underwrite risk, which had actually, accelerated the commoditization of these products. So, one anecdote there is for group health insurance, which I'll tell you more about. It's our main revenue line. Every single player uses the same 3 data points to underwrite it. And after decades of doing that, the pricing has become commoditized and almost uniform. So as these things were kind of going through our head, we encountered a stroke of luck, which was that in early 2014, the Dubai government announced that private health insurance would become mandatory for all employees. And even though we were a B2C platform at the time, we started getting a lot of SMEs coming to us, asking us to help them find the right types of group health insurance policies for their employees. And we immediately hit a roadblock as we tried to engage with them, which was that they simply couldn't give us good quality data about the employees, right? So things were happening where we'd issue a policy and they'd realize that they had included an employee that had recently left from the company, or they forgot to include someone who had recently joined, or even things where they had, messed up someone's date of birth, so the premium was inaccurate. So we set out on a...
Just a second, Talal, and
sure.
Tell the group what's going on with me right now. It's a little unfair because I know some of this story, and I know we've had discussions. I understand the pitch. I know people who have invested in Talal, but normally I would like a little less of the precursor story before I get to the business. And so I want to hear what the business is today more than I want to hear about how you got there. Having said that, because I know this and Talal knows I know what it is, it's a little hard to fake it here maybe. And so what is great is that his story is not so much about his personal journey. It's about the journey of the business. And while I may be uniquely cold in my personal aspects, but I hope not, it is important for me to know the journey of the business as opposed to too much about, I left from here and I went from here and here and here. But let me mention one thing, and I don't know if we're going to go to the team. We should go to the team. When I'm looking, and this would be not just in the US, not just in the Middle East, but globally at deals, it is a non-scientific filter, but I'm looking for somebody who is a citizen of the world. I want them to be able to say, I spent some time in the US, or I went to UCLA, or I used to visit my uncle in Toronto every summer, or I went to school at INSEAD, or I grew up in Brazil. It really doesn't matter what it is, but somebody who has the ability to see the world, not just their current country or ecosystem. And if you look across our portfolio, if you look across other successful companies, it's kind of inescapable to me that type of founder or people like that on the core team are valuable and have the ability, and the reason is because there is no excuse for not knowing what companies are similar around the world. And if you don't have that sort of global perspective, it's hard for you to even think, well, I'm going to reach out and figure out what's going on in Singapore in this space, or what's going on in Mexico City. So I'll stop there. But that was a key drop in that he put in there that I was listening for, and it was there. Go ahead.
Yeah, I'm trying to figure out where we stopped there.
We were into the fact
law,
that
the
they
health
didn't have
insurance law.
data about their
exactly, yeah. So as we set out to solve that problem, we discovered that 75% of SMEs in the UAE were not using any technology for their HR needs. And that was sort of the aha moment for us. And we decided to pivot the business. And what we do today is we give companies a platform where they can automate HR administration benefits. So that's health insurance, payroll, employee record management, time off, and attendance at no cost. And through that platform, we're able to actually distribute different insurtech solutions, the primary one being the group health. So once the company's on the platform, about 65% of them will actually purchase their policy through us. And we've continued to leverage that data to introduce new products. And we've also recently started using that data with one of our reinsurance partners to start underwriting different products as well. So that's sort of the strategy for the company. In terms of traction, so we've grown this year, or will grow this year, from $9.8 million in revenue to $12.9 million. And again, that revenue is generated as recurring commission on health insurance premiums. And it's important to note that we do consider this to be ARR because we retain revenue at a rate of over 80%. We currently have 400.
You can assume that I'm not going to be an expert in how insurance commissions turn into net revenue. Can you give me a little bit of that path from an accounting perspective or revenue recognition perspective?
Yeah, absolutely. So commission rates are regulated in the UAE. So on a group health insurance premium, the insurance intermediary, which in this case would be us, receives 10% of the premium as their commission every single year. The nice thing about the UAE market as well is that approximately 75% of the customers pay for the full 12 months upfront, in which case we're getting our commission upfront as well.
Okay, so just for the benefit of folks, what I'm hearing here is two things. One, he's got a good grasp of it. Two, he has a good way of explaining it, and I'll tell you how important that is to me in a minute. But three, I'm hearing, it sounds like this is a UAE only business right now. So then I'm going to ask, are you only in the UAE?
So right now we're only operating in the UAE. In the UAE, we can get to a $30 million revenue, an annual revenue. And to do that, so as we look at markets that we want to enter in the Middle East and Africa, we apply a pretty straightforward filter, which is in any market we go into, do we have a clear path to get to $30 million in revenue over a 4 to 5 year period? And the way we determine that it's a clear path is that we merely have to be a top 5 to 10 player in each of our revenue streams, right? So in the case of the UAE, for example, if for us to get to $30 million in revenue, we have to be the number one insurance broker. And that's, twice the size of the number 2 player. It's not a clear path. It indicates there's not a lot of scalability there. But in the UAE, to do that, we just have to be a top 7 player. So that gives us the confidence to say there's scalability in this market. Applying that filter to Middle East and Africa, it's really only the UAE, Saudi Arabia, and South Africa where there's that type of scalability. And those are the next 2 markets for us.
Okay, so when I'm absorbing that, I am thinking largely very positive things about the analytical approach to that. And what you hear often is the knee-jerk, Saudi is the next large market, so we have to go there. The ability to articulate that you need a certain amount of ARR, you need to be in a certain ranking in terms of the players to get there is another level of analysis that we like, of course. I happen to know a little bit of the history and the complexity of trying to get in and out of Saudi over time. But that would be sort of a wrinkle that you have to think about, because if it's a global investor who doesn't know the GCC, for instance, they may not know the incredible complexity that often exists when you have a shooting star type company in the UAE that wants to get into Saudi. But I'm sure you know many of your colleagues who have done well in the UAE for years and have still not found the path into Saudi. Generally speaking, that's a regulatory issue more than anything, or a series of regulatory hurdles and structural hurdles. It's not the viability of the business, and it's not the product, and it's not the team. But it does exist, and most global investors may not know that. It's an open question whether, if they don't know that, how helpful could they possibly be? On the flip side, if you are a global investor, and we took the position long ago that Lumia, which is a US fund, which has sort of a group of value adds that we can bring that are not necessarily better, but they are different probably than what the local group of VCs can bring. That one of our value adds is unlikely to be the ability to help you grow in Jordan or Lebanon or Saudi, because it would be a very unusual for me sitting in the US to have better expertise at that than the players around the table who are from the GCC. And so if the deck says we're doing well in the UAE and now we want to raise 10 or $20 million in Saudi, it's unlikely, certainly impossible, that I would lead it, and not that likely that I would participate, because my role is not to underwrite that step of growth. A better role for a Lumia is, hey, we're in UAE, Saudi, Bahrain, and now we need to consolidate or grow. But we've created a global company, and now we need to do more. And Talal has heard me say that, of course. And but you should think about that in advance, because you may want to think through how you couch that situation for specific investors. So go ahead.
So I guess typically at this stage, I would be in Q&A.
Okay.
So once I've told you about the business.
So can you tell me a little bit more about your team?
Yeah, sure. So aside from myself, the team consists of our two co-founders and our CTO. Our CTO, Safa, was a founder at Peak Games in Turkey, which when he exited was the largest or second largest social media gaming company in the world at the time. From there, he moved to Ops Genie, which was later acquired by Atlassian, and then he left them before the exit and joined Bayzat. In addition to him, we have Tarek, who's our Chief Commercial Officer and our primary angel investor as well. He spent his career at GE, graduated from their corporate audit staff, and after he was offered the position to be a CFO of one of the divisions, decided that he wanted to try the startup life. I'm sure he regrets it greatly now. And actually, probably with the performance of GE, maybe not. But then we also have Brian, who's my co-founder. He heads marketing and customer success. Before Bayzat, he was leading marketing for one of the fastest growing local FMCG brands called Al Alali. And he's a childhood friend since middle school.
Okay, so this is a tricky one, but I think it's relevant from a global perspective. I've met Talal's brother. I know some of these relationships. Generally speaking, anything that is more sort of friendly or familial than I met him at Stanford undergrad, or I met her at Harvard Business School, scares me. We are not used to relationships in a company beyond business, arm's length relationships. Husband, wife, brother, sister are very common in emerging markets, really almost all emerging markets, but they're not common in the most developed countries' venture capital things. And so what they do is they trigger a fear. They trigger a fear that some sort of unusual loyalty that takes alignment away. And so you have to think through that process. Local investors are completely used to it. It doesn't faze them at all, but it sends a signal to the non-local investors. And usually it is worth sort of a background, as opposed to this is my brother, the group is this, and this. But of course you have to be upfront about relationships too. So a childhood friend from age 6, I'm not sure I would have mentioned that, because somebody who's been your friend for that long, you can't put much into their judgment. And it's a tricky area. So the good part about the team is it's incredibly diverse and broad. And so what I would ask next is who does what from an external versus internal perspective on that team?
So, do you mind elaborating what you mean by external versus internal?
Yeah. So if you're pitching, I know you're doing it, but nobody else seems to be here. Now, of course, this is an Endeavor event. If you're having a all hands meeting, does somebody else do that internally? If somebody needs to be fired, who does that?
Yeah, so look, internally, so we're pretty autonomous in how we work. So things related to new sales, account management are handled by Tariq. Things around marketing, customer success are handled by Brian. When we do all hands meetings, we typically like to rotate, right, so that the team is building a relationship and seeing, and getting an understanding of how all the different executives think, and building those bonds. Externally, in terms of, fundraising, it's myself who handles the fundraising and the relationships with shareholders. And then, around partnerships, things like that, it's really around, where is it most relevant, and where do Brian and Tariq or Safa pull me in to assist them?
Okay, so then the other thing that I look for is who is pitching. And because it's sometimes hard to gauge a person right away, generally I'm looking for a collective approach. I know it's not always possible, but in an ideal world, you'll have the founder, the CEO, whoever that is, who is generally leading the charge. You need to have one person leading the charge, but they would have one or two other people. If it's at a certain level, it may be the finance person, or it may be the more technically oriented person. Because where we typically invest, maybe that's a series B, C, D, it's perfectly okay for the CEO, for instance, not to know every aspect of the finance piece. It may be that the revenue in Jordan is a little off this quarter or something, or a payment hasn't gone out. And so it's okay if the finance person needs to fill in some blanks. Same with the product. That person may or may not know where some delivery of a certain thing or an API or whatever is ready or not. That's fine for me. But what I'm looking for in that team, in a perfect world, I get a little bit of variety in personality types. I'm not a proponent of a team of extroverts. I know there's a stereotype that the best leaders can, motivate people to walk off a cliff and all that kind of stuff. But frankly, being an introvert, I have a little bit more of leaning that not that anybody has to be an introvert, but that somebody should have the ability to listen. And it's very hard to be the person speaking and listening. So it's easier for me to see a team dynamic. So if Katopi is in the room and Mo brings in Sam or Sammy, one of the, somebody else who's sitting there, and you can see they're hearing what I'm saying while Mo might be talking, or vice versa. And that is critical, because forget the VC, although it's useful to know that they're listening to what we want also. But when they're talking to employees, the communication has to be a two-way street. When they're talking to customers or partners, the communication has to be a two-way street. And sometimes it's best done with a team. One person promoting and one person absorbing. Okay, so
just to clarify, so during the first pitch meeting, you were saying that you like to see not just the CEO, but someone else as well pitching to you?
Yeah, I do. And again, because we're not seed stage investors, although that's great if it exists at a seed stage, it shouldn't be that hard. I mean, there should be multiple people who are at a level who are capable of that. And I know there are logistical reasons. Hey, we flew to New York and it cost a fortune, so there's only one of us, and okay, fine. But I'm just giving you the ideal situation. Okay, so now what I would like to do, what I would typically do is, okay, so what are the key metrics that you're looking at in your different segments of UAE customers?
So when we look at our customers, we've taken an approach where we target specific ideal customer profiles and segments. And then once our penetration rate has reached the target level there, we'll expand to other ICPs. And that's really to create alignment across product and sales and marketing. So right now, the current customer profile is companies that are anywhere from 35 to 150 employees. Primarily, or 80% of the employees should be office/white collar staff. So that's knowledge-based industries. And that really fits in pretty well with our ability to cross-sell at the employee level.
And so that's what Talal just said makes me really excited, particularly if he can tell me why 80%, because those are the type of metrics that shows me that they're not winging it. They have built over the course of developing the product and pitching customers and generating revenue enough data to know what works and doesn't work, and now they're focusing their decisions on that. So it would be great to understand, I would say something, well, why 80%, why not 70%, or why not 60% or 40%?
Yeah, so from our experience, companies with a higher percentage of blue collar staff look for specific features in the platform catered to them, especially around things like shift scheduling and attendance. Whereas, and that was starting to kind of spread us thin on the product development side. So that was why we decided to take a call on what type of companies we wanted to target. The second component is we're really investing a lot in the employee experience as well. And that requires, employees that, one, have disposable income, a higher level of disposable income, and two, are very tech savvy. And again, from looking at the usage trend with, companies in some of the other sectors we were targeting previously, we did have some challenges in getting them to use our features effectively.
So now I'll give you two things that would be a reaction there. Very tech savvy, requires our customers to be very tech savvy. Could send me running for the hills, because I'm thinking, geez, this must be a hard product to use if they have to be very tech savvy. But at the same time, where my mind is actually going is, okay, that's code for young. And he's looking at me saying, well, I don't want to say young too many times because Chris is old and it's going to make him feel bad. And that would be fine if it's geared toward youth, or if the biggest uptake or the most engagement is among the younger employees, particularly in a region where that's what's up and coming in the workplace. But it would be interesting does tech savvy sort of come along with being young, Talal?
No, that's not really the case. So, I'll give you an example of some of the feature sets when I say tech savvy. So today on our health insurance experience, any employee can open up the app, can consult the doctor through the app, and get their prescription fulfilled and delivered to their home and approved by their insurer. So these types of features are a bit more challenging to get blue collar workers to use.
Mm-hmm. Okay. So then, who is typically, or what group are you typically selling to when you need to take this product and you go, this company is an ideal target? Who do you approach at the company?
Yeah, so given the size of the company, so typically the main sort of champion within the company would be the head of HR. And with the head of HR, of course, decision makers, which are typically the CFO or the CEO, have to sign off, especially when it comes to the health insurance. So, from a sales perspective, we try to engage both the DMs and the head of HR.
Okay. And when you say we, are the founding team or the senior members part of the pitch to companies still, or is it completely out of your hands?
So, I mean, the focus, from early on was to really build a world-class sales force and combine that with the world-class product. So we've set up, like most typical SaaS sales organizations. So we have SDRs who are responsible for prospecting, qualifying leads. Those are handed off to business development managers who are incentivized on new business, and then move to account managers who are incentivized for retention. The involvement of the executive team, I mean, myself, I do go to sales pitches probably once or twice a quarter. And that's just to see what the current pitch is and stay, up to date. And then Tariq, our chief commercial officer, does get involved when it comes to very large deals. And then, of course, we have our VP of Sales and VP of Account Management who manage the teams on a day-to-day basis.
Okay. So I know we don't have a ton of time, and just on the time, one thing I would suggest is that, you know, a lot of times these things are booked for an hour, but usually there's enough greet, meet, do you want a coffee? Oh, I'm finishing up a call, type wasting of minutes around it, that I think your pitch is best structured for a good block of time less than the meeting is scheduled for. You, of course, should have some things in case your VC runs out of steam to fill in the blanks, but it's always good for you to get through your key points, and it's never great for the meeting to have to end, for me to say, oh my gosh, I have to go to yoga or walk my dog. So the meeting is over and you haven't gotten through the deck. So just as a sort of structural thing, this is a little different because we're doing more Q&A, and that's probably, well, I think you should have enough to say over a 45-minute period, or a half hour if it's a 45-minute meeting. I was gonna, so now let's go to, so I don't want to make you talk about fundraising and anything specific that you don't want to talk about, but what does your current shareholder base look like?
So we've raised $31 million to date. The most recent round was our Series B round of around $16 million. That was led by Point72 Ventures, which is a $15 billion hedge fund based out of Connecticut. And then the second largest investor in that round was Mubadala, where actually their first investment in the region and in the venture space. In addition to them, we have some family offices as well. Kanu Group, which is 51% shareholder in AXA and the entire GCC. And we also have a publicly listed insurance company as well. That's a shareholder. That's been quite strategic for us to be able to introduce new insurance products in the UAE.
Okay, so the reaction that you're going to hear from me is mixed on that. And it may be a little different for, it certainly would be different for local investors, and it may be a little different for a first-time non-local investor. I think everybody knows that there is a bias by traditional VC against strategic investors. In the US, it's a pretty strong bias against that, because there are so many VCs, and the knee-jerk reaction is, well, they couldn't get a financial investor. I don't think of it that way, generally speaking. I think that there can be strategics, whether they own insurance companies or they run insurance companies, or other HR platform aspects, that can add more value than their money. But it will almost always trigger a line of inquiry, and it may not be in the pitch, to make sure that their investment doesn't come with any strings. And meaning, is there something where they get to buy out the company, or is it one where their relationship with the company scares away 10 other potential underwriters who could be on a platform, or something like that? And so you need to be ready with the pros and cons of that relationship. And so when you have the strategics, family office is a tricky thing. In the MENA region, of course, until only the last few years, there wasn't that much venture capital activity or funding available. And so while that wouldn't normally ring great bells, it's an obvious that it has to happen sometimes if you want to get funding. And then the Mubadala piece, because I am on the board of Hub 71 and might have seen some of that back and forth. It of course it's a great thing, but I do think that globally, in spite of the best efforts of Mubadala, I think when you say something like that, Talal, you should assume that people don't know that much about Mubadala. And even if it's just Mubadala that runs a $1 billion venture portfolio across 3 regions, San Francisco, the US, Europe, and Asia, or whatever it is, just so that people think, it's not just the sovereign fund backing the local. They actually know what they're doing in the space. So to be there first is really a big deal. Not a sort of, hey, we were told we had to put some funding into the local ecosystem. So anyway, that's that. And then what is it that you're looking for in terms of value add in your next round?
So in this next round, we'd really like to bring in some experienced international investors. I think the ecosystem here is still relatively young, and as we're moving hopefully towards an exit, given that we're post Series B at this stage, having someone who has actually seen the entire life cycle of a company and support them through an exit is something that's not very available in this region. So I think that's one. 2 is somebody who has the exposure and can benchmark us to other companies around the world. So that's the second thing we look for. And then 3rd is somebody who is willing to work with us and challenge us at a board level, but also go past just the board level and really get into the strategy and some of the execution things as well, to continue helping us get better. And lastly and somebody who, if it's not them themselves, at least in their company, they've hired operators, so people who have actually founded startups and exited as well.
Right. Now, so my reaction to that is there's sort of 3 things going through my mind, just for people to think about it. It's logical, so that's a plus. You could say, if you knew the background of Lumia or my background, that gee, that sounds like it's directed at us. Which frankly you should do. You should have thought enough about that question, which should come up. If it doesn't come up, there's a problem, because you want your VC to understand if they can add value and if there's a fit. That you have some reason why that particular venture capital fund or firm or partner would be the right fit for your company. Now, typically then I might ask, are you looking for a single investor, or are you more drawn to a group of new investors in this round?
Honestly, we're open to both. I mean, really, it's about identifying the key sort of partner who's going to anchor the round, and making sure that we can get them on board. And if their ticket size, isn't enough to complete the round, then we'll get supporting investors as well.
Mm-hmm. That is the right answer. I might have articulated it differently, but that is the right answer, because what you don't want to do, if you can avoid it, is set up sort of paradigms that are your optimal paradigms early in the process, because invariably they will change. So if Talal had said, I really just want one investor, and it turns out that it's going to be a collective, then it looks like he failed. And nobody wants to get on a failing thing, even though that's kind of silly. So you just don't want to set up these definitive expectations. Like, I want one investor from Europe, one from Asia, one from the US, or I want somebody who's taken 6 companies public, because it's just unlikely to show up. We're open to either, I think is what you said, is a perfectly fine answer, and it's really the better approach. It also doesn't eliminate me, and rarely do you want to eliminate a VC from potentially investing. So if I'm thinking to myself, well, at this moment in our fund, we have only 3 investments left, and we did a little larger ticket size in the first few, so these are going to have to be on the smaller side of our average. So I couldn't lead the round, or I couldn't be the whole round. It leaves room for me, and I'm thinking, okay, great. Similarly, if I'm thinking, gosh, our first 3 tickets were on the smaller side of what we told our LPs, so I need to pump up the volume on this next one. And you've just given me the ability to take the whole round effectively. That's good too. So you're building in it flexibility. And I did, by the way, this goes back to a point that Talal made early on, which I think is really important to understand if you can. It shouldn't make or break your investment decision, but what is the status of the VC? You could be the first investment, you could be the last investment. They may have closed part of their round, but not all of their funding. The big difference between being the first investment and the last investment could be the pressure to exit. If you're an investment made in year 4 of a fund or year 5 of a fund, and the fund is 10 years, and they're busily raising money for the next fund, they want out much sooner than if you're the recipient of money from day 1 of a fund, because then there's a 9-year or more timeline to achieve an exit. And it isn't a bad thing for your VC to want an exit. It's in fact imperative that you understand that if you're going down this venture path, there is going to be pressure for an exit. That's why VCs invest. But knowing where those dynamics are going to come in, which fund you're in, where it fits in the life cycle, is really important if you can figure it out. Having said that, you don't want to offend the VC by making that the most important thing. To me, that's coming down the road. I don't think you need to worry about it in your first pitch. In your first pitch, what you want to do is make the VC want to invest in you. You can be sitting back there going, oh my God, the last thing I will ever do is take money from that old bald guy in Maine. But don't let me know that right away. You want your optionality to build as you have pitch meetings.
So I have a question, if you mind. So a lot of, especially in the US now, I mean, there's a lot of VCs who treat prospecting deals like a sales function. So they have a lot of junior people reaching out to us and things like that. And our just more for fact finding, it seems, and to kind of populate their database. And sort of my experience has been, I'd prefer to not talk to them and sort of bypass them and reach out to, one of the senior people in the organization, just because I've never come across a case where those discussions actually led to anything. Could you talk about that a bit, in terms of who within a VC should we be speaking to?
Yeah, I think you're exactly right on that point. It's a little bit hard to know. And of course, it's hard to turn down. But in reality, most of the big funds have teams of people whose job it is, as you say, to populate a database. And so maybe they need to talk to every HR platform on the globe. And maybe they need to talk to everybody who has an insurance product. Or maybe they need to talk to every company that has $5 million in revenue in the Middle East. because they're trying to build their database and use that to direct their investments. I'm sort of a proponent that it's okay to have an initial meeting with them, but it's the second and third meeting that get problematic, because we all know people who tell me, yes, I've got a second meeting with, Joe Blow at some big fund. So they think that means they like them. And instead, that's not true, because there are many levels in these databases. And so a second meeting is just another information gathering, most likely. Nothing wrong with that if you have time for it, but the number of meetings doesn't correlate to the likelihood of an investment in these big funds when you are with a junior person. It's not hard to find out if they're a junior person. If they've worked there for less than 2 years, or they look like they just came out of undergrad, then they're a junior person. And so you do need to be careful about that. You don't want to waste your travel budget flying to New York to have that third meeting with that same junior person.
Chris, I just want to jump in and say we have a few more minutes left.
Yep.
So maybe if I just want to ask the group if they have any questions.
Oh, great. Okay.
I have one. Hi, Chris.
Oh boy.
So I'm sure Talal can feel the same pain that we feel, which is, Middle Eastern funds typically, after a certain size, there's very limited growth capital in our region, for the region, and getting U.S. funds to invest in the Middle East is always a challenge. How would you say, what should we do to, change the status quo? What are things we could work on?
Listen, I think we were on a great trajectory in this regard until COVID, and it's just sort of inescapable that the cultural differences, the geographic differences have been sort of highlighted by the fact that nobody can travel, and you might get trapped here, and quarantine is this, so I feel like we've actually lost some ground, sadly. But I do think that the easiest people to achieve global financing are the ones that have a global perspective. And the team isn't all coming out of Eastern Province, or just everybody who grew up in Abu Dhabi. It is a mix, and it is sort of imperceptible, but that's what appeals. Almost everything I've mentioned, my brother is the co-founder. We almost all of these things go back to the inherent issue, which is it's easier to invest in a company down Sand Hill Road than to fly to Dubai or worry about their issues that are separate from your issues. It's just easier. And so everything you can do, and I don't like to say this, but it's true. Everything you can do to make yourself feel like a global company, not a local company, is valuable. And it seems maybe a little fake, but in the real world, this is a pitch. And everything you do that makes a VC go, oh, geez, I knew I didn't want to invest outside the US. It's always more complicated. Sorry about that. It's always more complicated is a bad thing, because it makes it easy for them to say no. It just does. And, obviously, Mo, you're a great example of a team that has taken their company outside the region. And we know why. I mean, you've pulled back during COVID, but those are signals that are stunning to the world. And so people love that. But But to me, it's more about the quality and breadth of the team that sends that signal. One thing for MENA, which really important, expertise on the software side, building the platform, understanding the metrics. It's not a given, right? I mean, there's a perception that it's hard to hire great tech talent there. And so to the extent that you have that in-house, you've got people like that, which certainly Mo has in spades, is really eye-opening and comforting. And I've seen that in our process, Mo. I mean, you know, that was something that you could see our friends go, wow, okay, there's no disadvantage here to the team being in MENA. But it is hard. It is absolutely difficult. And it takes, you know, the types of things, success stories. I think everybody has probably heard me say the number of people who used to say to me, why on earth are you, you know, hauling your butt to Dubai to invest in a competitor to Uber? And then the number of people would say to me, hey, Chris, next time you're investing there, let me know. So you do have the ability to transform it. And you know, I think actually, you know, Talal and you, Mo, are likely people who are going to help do it. But you have the risk of being a pioneer and the burden of it.
We can keep going. We can go over during the break time. I think this is a really interesting discussion that can go for much longer. So I just want to encourage everyone, if it's okay with Chris and Talal, if anyone has any more questions, to go ahead.
And by the way, most of you know how to get a hold of me. I'm not that hard to get a hold of. So if it's stuff you don't want to talk about in front of other people, that's fine too. I'm happy to, you know, hop on a WhatsApp.
I have one question. I'm Youssef Shakor, founder of Kilimanjaro Environment. We are a waste to value company. And as I was explaining earlier today, we were a physical business and we are moving into a digital interface with our network of restaurants from which we do you hear me? Oh, no.
I hear you.
Sorry. And the challenge of starting up your business in a country like Morocco and now trying to expand it into MENA region makes it more difficult to attract, because Morocco is not even existing on the map in terms of attracting this investment in the region. And you have a winning service, highly growing, connected to European markets as a market. And how can you attract international funds when you start from Morocco, you want to expand into MENA, and your ambition is to go global?
Well, I mean, number one, it's hard. There's no secret. It's hard. And the starting point is not an optimal one. Luckily, there have been quite a number of programs started over the last couple of years in Saudi and Bahrain and UAE that have put, and Jordan and others, that have put capital into venture capitalists' hands. And that means that in theory, as these funds of funds put more money out there, the number of VCs looking at the same deals will grow, and they're going to therefore have to broaden their sights. But you will need to have an actual data-driven plan that says, here's why, Mr. Person who took money from PIF, or here's why, Miss VC who took money from Al Waha Fund in Bahrain. Here's why that's our next market, or it's our third market. and it can't be BS. It's got to be data driven, and that may allow you to attract those. But I will say this, that you are the example of the reality, and I do find a lot of entrepreneurs who have done their research. They've read about everybody's startup, and they've read every Reid Hoffman book and Brad Feld book and everything, and they have a idealized version of fundraising around which they're constantly trying to optimize their round. And my usual approach is, if somebody is standing there with the money, take it, because the amount of time it takes to optimize a round is usually not worth it. You lose so much time and momentum on the business. And I don't know, that doesn't really answer your question, but for the broader group, you just have to get out of that. Who cares if Andreessen's in your thing? If you've got 3 other people with good capital, and you are the expert in your business, not them. You are the expert. So you're going to be the one that grows it, not some magical VC.
Chris, we have a question from Martin. When you see a founder spend a lot of time on fundraising, doesn't this raise a red flag that he should rather instead be focusing on the company than focusing on fundraising?
Well, that's sort of a follow-on to what I was saying. And there's a difference. It is not easy. It historically has been very difficult. Most of the funds in the MENA region were fundraising. They weren't deploying capital, they were fundraising. And so the number of sources of capital was very limited. And so, yes, it just takes a lot of time. The process has been broken or nascent for a long time. The family office decision-making, the process, even the funds who have separate IC process, just takes longer. But I differentiate time spent blocking and tackling to get basic funding done, which is way longer than it should be, but is what it is, versus even more time spent trying to put the perfect A next to the perfect B next to the perfect C, when the same $10 million could have been had much more effectively quickly.
We have another question. Is there a way to identify, this is Tobias, is there a way to identify if the lack of VC interest in your company is due to the company itself, or is it due to the co-founder presenting the pitch?
Is he saying his co-founder, meaning that it couldn't be due to him? Who is this Tobias? It might be Tobias.
That's me.
It might be you, not your co-founder. Listen, I think it's very difficult to say. These are not things that are necessarily susceptible to data. So it's hard to say, well, when I led the pitch 6 times and she led the pitch 6 times and they got 4 and we got 3. I mean, you're not likely to do that. So it's really a bit more intuition and networking. I do think that I think that there is a really high level of collegiality in your region. And I also think that many of the VCs are capable of providing a sort of emotion-driven reaction, which means that a question like that isn't inappropriate. Are we just really bad at pitching? Or would we be better doing it another way? That would be unusual to show up in a San Francisco office. But I think it's, you just need to ping your folks and find out.
Okay. Do we have any more questions before we wrap up? Okay, I think this was really interesting. Thank you, Talal and Chris. That was super insightful. I think everybody agrees that it was very, very valuable. Thank you for taking the time to do this. And Talal, thank you for sharing all of the information on your company with everyone here. We have 5 minutes. We can stretch our legs for 5 minutes, and then we're going to come back with sort of an Endeavor celebrity, Guilbert, who is the Endeavor entrepreneur and chairman, of Endeavor Argentina. So we can break for 5 minutes, and then we'll see you back here. Again, Chris, thank you so much.
You're very welcome. Thank you all. Great to see you. It's good to be slightly connected to the region. And Talal, thanks for putting yourself in harm's way.
I was promised, Dalia promised that you were going to give me a $10 million term sheet after this pitch. So
Well, check your
looking
email.
forward to that. Yeah.
Email.
All right. Perfect. All right. Thanks, everyone.
All right. Bye-bye.
Bye.